And we're back. Welcome, everybody, to yet another glorious episode of Irresponsibly Long, not irresponsibly short.
We're making money again.
Things are looking up. I'm your host, Steven, here with my esteemed friend, colleague. Any other adjectives we need to throw in there?
Asian.
Those are nouns. Oh my goodness. Too much start time, bro. Oh, it's not good. For those of you joining us for the first time, this is the podcast where we talk about all things in the world of slightly degenerate investing. We degen, we learn, but most importantly, we have fun doing it.
Yeah, that's the key, baby.
Whether up or down, good times, but the up is better. But we make do. Anyway, I want to jump in this week first with a call to the audience, because I'm being told by our esteemed editor that we're not doing enough here. So if you're not subscribed to the channel, please subscribe. Just click the button, turn the notifications on, then you'll know when we get an episode. You won't miss out on a move. Who wants that? Also, if you're not in the Discord, come over to the Alfalfa Pod Discord. You can find it link at alfalfapod.com, and then we've got the Magic Lines paid community. Daily trade signals, updates, trading education. magiclines.xyz/IL. Check it out. 7 days for free. Pop in, say hello to me. I don't bite. We're having a good time in there. The
calls have been amazing lately, dude.
It's been a good couple of weeks. I mean, for those of you following us, or for who haven't been following us, I guess, for the last few weeks, I think you and I both have expressed this idea that we were going to get a very tradable bounce. We were short the market at one point, took those shorts off, eventually went long. I'm fully in long mode right now. Have been long Bitcoin since around 82K or so. We're sitting here 88K as we record this podcast. I've basically been playing the Bitfart barbell.
Yeah, the hot hair has been rising for you.
The Bitfart folio, the ultimate portfolio construction. Fartcoin continues to be a dream to trade, and it is on a little bit of a tear. So I'm sure we'll go over that chart, go over the Bitcoin chart, go over a few more charts, just get a general vibe of the market, where I think things are going. But I wanted to check in with you first. Have you made any positional changes over the last week? Are you still kind of you battening down the hatches for the coming storm?
I'm still mostly cash heavy. Sort of to my chagrin, because I felt like this bounce was coming. I was just too scared to go all back in again. But the things I bought are up. I was buying sort of the lowest hanging fruit, in my opinion, was just Amazon, Google, stuff like that.
Yeah, that's right. I remember you saying buy the dip on those. It's good enough. It's good enough dip for these companies.
They're up 14%, both of them, which is fine. I'll take that.
It's fine. Whatever.
Yeah, whatever. It's a year's worth of returns in a week or two. It's fine.
Markets are hard, man. It's like you are so long and then you get slapped in the face. It takes you a while to figure out that you're no longer in a bull regime. You sell everything, you get short, and then the next thing you know, everything's ripping in your face and you just move to all cash.
And then I feel like the same cycle could happen again, where it's the latecomers go all long again, and then, oh yeah, it's not really that bullish of an environment anymore.
Yeah. I mean, sometimes, and in this particular instance, I'll position for these kind of counter trend trades in a bit, just because I need to avoid the FOMO, because my longer term 3 to 6 months, I think, is still bearish at this point. Although I'm sort of rethinking things, pondering, considering. We had a conversation a few weeks ago. We spoke about the idea that there was a lot of pain in the markets and a lot of people wanting to get the hell out of stuff, right? So if there was going to be a rally that got people to actually reconsider their priors and maybe trap them again, it would have to be a bit of a ripper, right? Because everybody just wanted to sell a bounce so badly. And sometimes when that happens, the bounce either doesn't come or the bounce is so big that people get sidelined throughout the whole thing, and then they sort of FOMO in at the worst possible time at the top when they're sure that actually no, it's over, the worst is over, but then back down we go and you lose both ways. It's just it's a beautiful thing, not at all infuriating.
Yeah, it's hard. I'm like worried that my original thesis is just like we had a 10% correction and then it's up only again, and I'm sitting here being defensive. That's what I'm worried about most.
Yeah, and I'm worried about that too, which is why I found the happy medium where I just look for good spots to kind of just mash the leverage button with the perps portfolio. So pretty long on the corn right now. I added more corn this morning. Took some profits last week on that nice little move up, and I'm feeling good. Let's pull up the Bitcoin chart. Let's give the family some visuals here. Click a button here and here and here we go. Voila, Bitcoin chart. All right, so I'm going to give you guys just a quick little high level thing, kind of like a TLDR of basically this week's Magic Lines video newsletter. I started very zoomed out for people, right? Here's your quarterly chart. The quarter ends in 6 days, right? So we're at the end of a candle. Actually have a nice little educational segment for you at the end of this pod, and we're gonna bring it all back around. But
cool.
Because we're at the end of this 3-month candle time frame, like I'm a little wary of doing anything too crazy, drawing any mega conclusions right now. But like, I think for all intents and purposes, we can kind of plan that this candle is going to basically close somewhat like this, and think about what that might mean for the future of Bitcoin price if it were to be the case. Eric, you've been with me for a while, so I'm sure the first thing you're going to notice here is this lovely little
FVG.
What is this? FVG, the old fair value gap, the imbalance, whatever you call it. This to me is like a very clean long setup, right? If these were hourly candles, you don't have to be a rocket scientist to say this is like a very bullish trend. Bullish. Like we've actually had no valid pullbacks on the quarterly candle, i.e. there hasn't been any bearish candle that's closed below, the prior bullish candle. So it's basically like bullish candle, bullish candle, bullish candle, bullish candle, bullish candle, right? Just basically 1, 2, 3, 4, 5, 6, 7, 8, 9, I don't know, 12 consecutive quarters of bullishness. So what's your bias, Eric? Your bias is to be bullish, of course. Mm-hmm. Like, don't fight the trend. The trend is your friend, especially when the thing you are trending is the inevitable orange coin.
Yeah. 13 million per coin.
Oh, baby. Can't wait. It's going to be a fun podcast when that happens. At any rate, whenever you get this setup, right, where you have kind of you can see a bunch from these candles. You get a bit of like a liquidity grab here, sweep, and then that leads to a big expansion candle, right? All things good. We take the high of last quarter's candle, little sweepy sweep. No big deal. It typically means when you fail to close outside this range, though, the price wants to retrace lower. Basically, the Q1 candle on Bitcoin, for all of the pain in all of the markets that we saw, Bitcoin is just going to kind of put in like basically a little doji candle, right? An indecision candle, a range candle, a consolidation candle, right? But when you put in a ranging candle after a big expansion, the likely thing that's going to happen is typically price is going to maybe explore the bottom of the consolidation range, run the low of the consolidation range, and then go higher, right? So if I were to just say, like, what do I think the most likely thing is to happen? I mean, there's some like kind of obvious points of confluence here for me. Let me fib out this range so you can see it there. So basically, this is the premium of the range. This is where stuff is expensive. This is your discount. This is where stuff is cheap. There's your 50, right? So we want to get long below the 50 if we're bullish. Make sense so far?
Yeah, so far so good. I like this.
All right. So what do we have right around here? 73K, 74K-ish. We've got the prior all-time high, big level, right? Very common for price to break out of a range, pull back, just test the top of the range and keep going. Right. So I see a lot of nice things here. And then we got one other point of confluence, which is that we've got the yearly candle. So now we're even more simple with price. And again, we ran or swept the high of the 2024 candle, and look at where the mid-range of this candle is, 73.5K, right? So basically a lot of stuff happening there in the low 70s. Looks to be like a good place to buy for me. As far as long-term back up the truck kind of stuff. I'm still basically just under the assumption, Eric, that we are, probably gonna, price wants to go back here, kind of test this like supply area and just kind of roll over, maybe something like that.
That looks easy, man.
It's just so easy. Oh, and we go back up. Wow, so easy.
Yeah.
Now, is it going to play out exactly like that? Rarely does, but it's an idea.
Probably you're calling it. You're calling it. Mr. Magic Lion is calling it. So I can see that, like the summer doldrums, off to the races Q4.
It happens. It happens a lot. But on the lower time frames, I mean, Bitcoin, it looks pretty good. It looks pretty good. Definitely moving up here on the daily chart. You can see on the weekly, we have a nice little sweep there. February low, bullish candle, close outside, bullish candle. This wants to go up, I think, in the short run.
Is NASDAQ telling the same story?
NASDAQ is telling the same story in the short run. Oh my God. Let me get those things out of there for you. So we took the short and we closed it like pretty much on the nose, just because I was kind of watching this little mid-range here, right? This is your last bullish zone. And then you got the mid-range, 19.1. Bing! Clean little move.
Beautiful.
Clean little move. But this it looks kind of similar to Bitcoin to me, where you had this just massive sell-off, prime area to bounce, but there's still a lot of bearish momentum here. We're gonna have the monthly close, which I think will be pretty interesting. Be watching it pretty closely on NASDAQ because do we close outside or inside of February's range? Nice little leading indicator of stuff. And then we're gonna have the quarterly close as well on stocks, which doesn't look too bad, to be honest. But my two basic ideas are this is just a big fake out. We reclaim and just go higher, and everybody's like, "Oh, did you buy the dip, Anon?"
Right.
Or alternatively, things do end up eventually taking a turn for the worse, and then probably looking around 15K on NASDAQ, I think, is kind of my sweet spot for a pretty bad dumpy dump, which would be 25%, which seems on par with kind of nasty corrections we've had in the past. I'm still trying to work through this idea that we got all the debt. They want to roll over the debt. The interest rates are too damn high, right? So they got to get the interest rates down. How do they get the interest rates down? They crash the economy, force the Fed to do QE, roll over the debt, yada, yada, yada. If we start printing money, it lives happily ever after. And then, the orange man goes down as the greatest president since George Washington, I guess, is how it all ends.
Yeah, people are going to say that for sure.
Yeah, or it goes horribly wrong. We don't recover, and then we get President AOC, and then we're all converting our assets to Ripple so that we can move it out of the country and go start a ranch in New Zealand or something. I don't know.
Doesn't sound too bad either, man. I like ranching.
So yeah, I mean, TLDR for me, I guess, near term, 1 week, 2 weeks. I don't know. I could see this lasting for a couple months, to be honest. Pretty bullish. I do like Bitcoin to at least probably like the yearly open from here. What the heck's the yearly open, Eric? Yearly open is, what is that? 93.3. 93.3, I think, is your relatively safe target here for Bitcoin. I like 93.3. Solana, I think, has an even more obvious target. Solana looks pretty good, actually. So I think if you're long Solana right now, you get these juicy equal highs there.
Take a little liquidity there, maybe?
Oh my God. Let's put the little liquidity thing on that. Yeah, so I think Solana to 180, book it, stamp it.
Sounds pretty reasonable.
Yeah. I mean, I'm long Sol for. I actually had some limit orders for Sol at like 120 that I forgot about in my Hyperliquid account. Didn't even realize I was long until like
happy accident.
Yeah. Very happy accident. So yeah, I'm gonna TP some of the Solana at this high here. This is kind of like a key mid-range level, I think, on the weekly, whereas this is about 152. So yeah, game plan, 152, take profit, break even the trade, free roll the rest up to 180. And then I guess we just short and ride it all off into the sunset and then do it all again at like $70 or something. And then we retire. So easy game. Trading is so easy. What could go wrong?
Yeah. I same thing happened to me with Peloton stock. I forgot that I had some puts that I sold.
I haven't looked at Peloton in a while. What is Peloton? Piton?
Yeah.
How are we doing, Peloton?
It's just following everything else. Just a big bounce.
Well, it doesn't look so great on the yearly chart, eh? Really just get
a lot of room to the upside.
Did we test the low of this candle yet? I don't think we did. Oh, no, we did. All right, we tagged it. I was going to say that could be like an interesting little bounce target. That's a big move, over 100%. Yeah, I mean, this thing doesn't look too good. This was actually on, did you see Martin Shkreli's Bag 7 Down Jones 30 tweet?
No, I'm actually interested to hear what he's talking about because I'm taking the other side of that trade right now.
Oh my goodness. Let me see where this thing is. Shkreli. Where are my notes here? Maybe we do need to edit these pods, Eric. Maybe just pushing them live naked isn't the best idea for us. Oh, I found it. All right. Boom. Shkreli. For your institutional clients, introducing the Bag 7 and the Dow Jones 30.
Oh, I see. So it's not actually the Mag 7 just relabeled. He's got his own little index.
Yeah. He's got some crypto on here. We got a little whiff. We got our little friend ETH. Poor ETH.
Peloton. Yeah.
Yeah. We got Piton on here. Rigetti. You remember Rigetti?
Yeah. Quantum computing.
Okay. So I thought I pulled up a few of these to look at it. How do you think Rigetti's been doing since our little quantum computing episode?
Well, I know that it had a massive pump again. Yeah.
Oh man, yeah. I remember I remember during the quaint little superconductor days, we were buying this bad boy like where is this? Like here? Yeah, we bought it like here.
Yeah,
and then we were like, oh fuck this stock, down bad. LOL, the stock's dead. Yoink.
Yeah, it provided some good shorting within that next pump.
Good move, man. It's a smooth 2200%.
Oh yeah.
Yeah, I don't. I'm not shorting this thing.
I would never short a stock like this.
This thing looks scary. Yeah, I mean, I looked at some of the stuff on the Bag 7. Some of it looked like oddly okay to me. Like, what's Rivian's ticker? RIVN.
Yeah.
I was actually debating doing a little scalp long on Rivian.
This is a tough one, man. It's like never had up. I
just like maybe like 20, maybe $20, maybe a little bottom here and then push up to 20, maybe.
Yeah.
And then die. I don't know.
Yeah.
I know it's on my watch list. Haven't taken a trade on it yet. We did take a trade last week on, you remember Accenture?
Right.
Oh my God, dude. I woke up the next day and the stock was down. The stock gapped down like 9%.
Yeah.
Like the day after we recorded.
Yeah, Elon tweeted something, right?
Elon just pumped my short for me. Just was like, yeah, we got to cut all this bullshit government contract stuff. I think we talked a little bit about like Booz Allen Hamilton. Just absolutely has already been nuked to hell because their whole business, I guess, was just like government largesse.
Right.
But Accenture also nuking pretty hard.
Yeah. How about you called the short on what's that stock? AppLovin.
Oh, I'm back underwater on that.
Yeah, AppLovin has just like surged again.
I know. I took no profits on it. I mean, this was kind of a YOLO thing for me anyway because I was targeting like $50 or something absurd. It was sort of like a lotto ticket. I'm like about break even on it right now. Yeah.
I mean, a lot of these like high vol names are all just resurging again. Tesla's up like 27%. Like all this stuff is just pumping.
Yeah, I mean, this just gets kind of back to the, I guess, original question to this pod, the theme of this episode. Are we buying dips or are we selling rips? Are we buying dips or are we selling rips? If we're buying dips, if everything's bullish, I mean, this trash is going to pump hard. Right?
Yeah, probably for the next month. Till May, I think.
Till it may go away.
Yeah.
It's just so easy. It's just so easy. I mean, I think Andy Constant is still he's still pretty bearish. I saw he went on CNBC. Step one,
just looks
predict the growth slowdown. He's just freaking curmudgeon over there. This is what we're going to look like if we're not careful in 20 years.
Well, I like our style better. It's more fun.
Yeah. Predict growth slowdown. Get growth scare on policy uncertainty. Unwind short stocks, long twos. Go on TV, say growth scare is over. Second leg will require data, but be worse than feared. 5, fade the growth scare, dead cat bounce. So to Andy's credit, I know that he called this initial dump, position for it. And I think he unwinded at a pretty good time as well. But I know that he is now currently back underwater. Seems like he's thinking this bounce is going to be a little more short-lived than I'm currently pricing in. It's kind of like a nuanced thing what he's saying, right? I think he's basically saying there was a dump on this kind of growth scare due to like what the heck is going to happen with tariffs, right? And as the cloud of that has like lifted and people are feeling like more optimistic about that, now we're like squeezing all those shorts and we're rallying. But then Andy's saying like, well, actually the growth scare is in fact real and it's coming down the road. And I think he himself has said that he's sort of positioned for this like over the course of like many months to transpire. Yeah. So he's not getting liquidated tomorrow. But like that is the question. Is Andy right? Because I think the other perspective is sort of that a combination of factors, right? Like Trump is sort of like all bluster, but like nothing is actually going to transpire, and that like actually a lot of the underlying economic data is good, and that the courts or whatever other mechanisms of government will sort of restrain him from actually implementing anything that will self-destruct the economy. And then I think the other interesting bull thesis is just sort of this idea that everybody's talking about these two sort of paradigms, like one where government kind of just like spends a bunch of money, right? And the other one where we go like kind of austerity. But there seems to be kind of like a hybrid option that may be emerging, an option where you sort of have like the Doge paradigm and everything around it that is like cutting government expenditure, while at the same time, I saw Trump yesterday like tweeting and like pushing for like budget increases, which would be a little bit of like that could be kind of wild, right? Like you increase government inefficiency, and at the same time you just spend more, so you're not actually like cutting the overall spend.
Right. What about $5,000 stimmy checks? $5,000 stimmy checks to individuals, right? Too. I think like there's plenty of reasons to be optimistic. I think if I take a step back, I would say that the effects of Doge have been much more real than I anticipated. I feel like the tariffs, I guess we'll see soon, but the tariffs feel like more real than I anticipated. But I'm still leaving quite a bit of hope that those are mostly just a negotiation tactic.
Mm-hmm. Well, the big day for tariffs is now April 2nd. And it seems as though like April 2nd might be one of these rare trading days where you can kind of just sit in front of your computer as like a small fish and just mash like the market buy button or the market sell button, depending on like what exactly transpires there.
That'll be an actual like buy the news event, perhaps.
Yeah. I'm leaning towards it being like a buy the news event. I'm leaning towards it being like a short, medium term by the news event. There's even the possibility that we play out kind of like the 2021 Bitcoin fractal where we like double top. That was a really difficult environment for a lot of people, including me. At the time when I was much more of a novice to trade, because like you had this sell off and then price pushed all the way back up above all time highs, and you're like, oh my god, it's back on. But actually,
I thought it was
like
100K guaranteed.
The ultimate
at that
rug.
moment.
The ultimate rug, yeah. So just the biggest double top in the history of double tops, basically. And I know there's a lot of people out there like. Like I'm probably one of them where like if we reclaim like 100K or something like that, like I do think there's like a pretty good chance that things are maybe back on. But like you always have to keep in mind this possibility that you just do like a little kind of blow off top thing.
Right. It's just funny to talk about.
In and
like,
dump it.
Things could be back on or it could be over. It's like, I don't.
Yeah.
I don't know.
Well, when you get these kind of little blow off events, right, that mark tops, like they're often news driven, right? So you have like a news driven pump, maybe one that even lasts like a number of weeks, right? Gets everybody into the market, and then they get rugged, and then we go back down. So definitely a probable outcome. Like I don't know, like I don't know if April 2nd has the juice by itself to push us substantially back, not just like touching like over 100K, but like closing some weekly candles or even like a monthly candle above there. I am still of the mindset that like we can't predict every move, like everybody wants to think that they can buy the bottom and sell the top and then trade all the wiggles in between. And in reality, you can't. And the truth is like, I don't know what is going to happen. Like, and anybody that tells you they know what's going to happen is like a liar. It's just too complicated. But you can wait for these moments where like things are kind of clear and just, get your chips in those good situations. Like there are some sub situations where like I do have a good idea what's going to happen, right? Like I had a pretty good idea, like 80K, high 70s Bitcoin was going to hold and that we're going to get a tradable bounce. Like after all of that, bear porn and crazy bearish positioning, and just with the possibility of like anything that was at all good, just kind of lifting us back up, right? That was kind of a fat pitch to me. And I think right now is still like a pretty fat pitch. And we talk about like a chart like Solana, which is, trading low 140s right now as we record this, just like was in the 130s. I mean, we bought it last week in Magic Lines at like in the 120s, and 120 to 180 is like it's a big trade. It's a huge trade. Like if you
it's a big
nail that
move. And yeah, I think probably a pretty high probability for the percent return you would get for taking that trade. I think Andy Constant operates on a little longer time horizon, which I kind of do as well. And I think I side with him on this like longer term, like multi-month time frame, which is like I'm still just not wanting to be all in.
Mm-hmm. Yeah, and I know that Big Darius Dale over there at 42 Macro is kind of a similar mindset. He seems to think that markets are not quite pricing in the full implications of this kind of going in the other direction yet, in spite of this little quote unquote scare. So I think he's still leaning towards more downside as of, yesterday or the day before, whenever I checked in last. So there's definitely a lot of people who are, kind of like macro guys who are bearish. Like I still like don't put like a ton of stock in most of the macro people. It just always feels like very bear pornish to me, and it's just like it's like this self-reinforcing mechanism where everybody just wants to post bear porn all the time, because it's like their numbers were like never better than like 2022, right? And you're probably like me. Like even back then, I was listening to like 12 macro podcasts a day. I was like, oh my god, everything's exploding. And
yeah, I've always tried to avoid macro, to be honest. I like to invest in individual businesses, like single stocks. I try to find businesses that do well regardless of what's going on in macro. So I've always kind of just ignored it, but over the years it's been impossible to ignore. And now that's why I bought Amazon and Google. These businesses are good.
Mm-hmm. Yeah, you just have to embrace that it's a trader's environment. It's funny because we used to talk about this happening like years ago. We're like, oh, the next few years are going to be like crazy. There's going to be way up and way down. And that's like definitely all played out. It's a beautiful environment to trade in. And if you don't trade, then you just have to zoom like way out, which is what you did on your Mag 7 buys, right? You're like, oh, negative 15, 20% or whatever. That's good enough.
Yeah.
Holding these things for decades. And that's cool. That's a totally viable strategy. So I like it. Sounds like you and I are both kind of in agreement. Maybe buy the short-term dip, sell the medium-term rip.
Yeah, you know, exactly. That's how I feel.
Position yourself in the coming months for some generational buys, and then we ride the remainder of the roaring 20s to retirement glory soon. Yeah, again, so easy. Yeah, but like, I just think from like a what is easy, what is hard standpoint, you know, if you get Bitcoin at like 96K, like next month, I just feel like you could sell that, because the worst case scenario is like you flip bullish like 10% higher. And then the worst case scenario is like you lose half your stack. So the odds just become a little skewed at that point. So that's what I'll be doing. Anyway, let's wrap that section. I want to talk about some, maybe some more actionable stuff for the people. I think you had some. I don't know if this was a trade idea per se, or just like an interesting thing you wanted to talk about. You said you wanted to talk about Fannie Mae and FMCC, right?
Yeah, I wouldn't call this necessarily actionable. It's just something that came up on my radar.
That's fine. I got some actionable stuff after this, right? We'll give the people some actionable stuff.
Okay, cool.
This can be fun, informative, whatever you want to call it.
Yeah, this is very speculative and like irresponsible. But if you want to be irresponsibly long on something that's really working, I think the best performing Trump trade is something that we never even mentioned, but it's Fannie Mae and Freddie Mac. Ticker symbol is FNMA for Fannie Mae, and then Freddie Mac was like rebranded to FMCC. But these are companies that I had followed for a long time. Like they were kind of like the portfolio darlings of every hedge fund manager in like the early 2000s, and then the global financial crisis hit, and these things were basically just wiped off the map. They went into government conservatorship because the government bailed them out with like $200 billion and like took over 80% of the equity. They stopped trading on New York Stock Exchange. So now, even still to this day, they're on like OTC markets.
But I saw that.
since November 4th or whatever, this thing has gone from...
Oh, I got to zoom out. Oh my God, I didn't zoom out on this thing.
No, these were like the best performing stocks.
Oh, okay.
And like
dude, that's wild. Okay, so we're still pretty 92% from all-time highs, but yeah, I had no idea how much these things are ripping since the election. I mean, where's the election? Here? Yes, this is Trump. 519%.
Yeah. So these guys, like half of the U.S. mortgages go through Fannie Mae and Freddie Mac. So they have like $6 trillion of assets, and they earn like 50 bips on all that. So they make a fuckload of money. But since they went under conservatorship, they had to like give the government all of that money. That's like part of the deal. But most recently, Trump and Besant are talking about reprivatizing them again. So that's why this pump is going on. And Besant was even talking about it on the All In interview that was like a week ago or so.
I missed that part.
So Fannie Mae, I looked at the financials today. This is all like kind of like early stage information gathering. I'm not like buying this, but I was just looking to see how much money they make. These guys make $17 billion a year today. Their balance sheet is safer than ever because I feel like mortgage underwriting has just gotten a lot safer since 2008. But they make $17 billion a year on like a $8 billion market cap. It's all right. Like, it's all dependent on like what happens to the equity when/if they get reprivatized. It's something you could take a flyer on, and you can make a lot of money, because I think just at like a 10 times earnings multiple, this thing would be like $35 or something like that.
Okay. smooth 500% from here.
Yeah.
And you think that just is kind of binary? Like if they get reprivatized, it just
well, that's like
up?
It's reprivatized, but then how they manage that government holding, because the government has warrants to purchase 80% of the outstanding shares at a penny. But even when you take off 80% of their earnings and just say that belongs to the government, that's how I got to the $35 stock price. So I still think there's quite a bit of upside, even beyond $35, but it's all speculative. I mean, this could still be a zero. It's like
fascinating. I know Ackman is really long this, right?
Is he?
Yeah.
He's done pretty well on that. I think there's like other
funny how that works so easy.
Yeah.
Probably got long like right there.
What about like if they manage to get the yield curve down and then like people are able to like buy and sell homes again? I think that's another possible reason for this thing to pump. Or
that's what I wanted to run by you too, because I don't know. You saw the recent some of those recent housing data prints. I mean, sales were pumping, and I think it was last month's numbers. People were expecting like red numbers, and they came back super hot, which is interesting. So things are moving, and yeah, I mean, if you take the current administration at their word, I mean, they're pretty big on increasing housing supply. I think it's kind of like a magic thing for national prosperity. So
this thing could end up being like a TLT on steroids.
I like it. All right, cool, man. Thank you for bringing that to my attention. I learned something today, as I do every time we do this show. All right. Something I've been pondering, I've spoken about this before in the past, but one of the most interesting assets in crypto right now to me is Curve. The reason Curve is interesting is from sort of like a fundamentalist perspective for people who don't know. Curve is like the OGest and still, I think today, like largest stablecoin trading rails, right? Like just massive amounts of stablecoin volume flows through Curve. It remains to this day like the only thing that's like not a casino that crypto is used for, en masse, right?
Does Curve take a little bit of a spread on each trade? Is that how they are set up?
Mm-hmm. Yeah, and they have a very, very complicated tokenomics, right? Because they've got this sort of VE curve where you can lock your Curve tokens up for like a predefined amount of time. I think the max lock is like 4 years or something. And then depending on how long you lock the tokens up, you get like an increased revenue share of all the volume that goes through the protocol.
So do the people that do stake, like there's like value accrual happening even right now?
Yes, there is. Problem with Curve is that the token it's highly inflationary, and the reason it's inflationary is because there's a lot of rewards being put out, right? Like you're rewarded with Curve tokens for doing particular things, right? And there's like a whole complex underlying economic system because like you can use the Curve token, like the Curve token has utility in that it allows you to basically like vote and direct rewards to particular pools, right? So if you're like if you're like the Frac stablecoin or something, right? And you need like liquidity for your stablecoin like that, well, there's an incentive for your protocol to like acquire these tokens so that you can direct the rewards to your pool so that you incentivize people to provide liquidity so that your thing can kind of exist.
So that's
you have
that's what you're showing right now, is that sort of like governance token mechanism that has these like pretty clear incentives.
Yeah, but it's complicated to model because you've got the high inflation on the one end, but you've got the mechanism to lock up a lot of that supply for long durations, and then you have the demand for the token for the direction of the pools, and then you have the demand for the token because revenue is generated and directed to the token. So there's a lot of things at play here, right? But like from like a technical perspective, I mean, this is interesting to me for a lot of reasons. I think if you look at Curve on the the yearly chart. It's very simple. It's a very simple kind of range analysis, right? Because you just have this candle here, your 2020 candle, and you've got your candle high, you've got your candle low. I'll make that a little brighter so that you can see it. You can basically see like price is sort of just range bound, via this candle.
I know what comes next. I think we're going to show a mid-range.
Oh, wow. You're right. We are going to show a mid-range. How did you see that coming? Yeah, we've had a couple of sweeps of this candle and sweeps of the 2022 candle as well. I would say that this, are you familiar with the CRT?
No.
Not critical race theory.
No, I'm not familiar with that either.
I think it's candle range theory. It's kind of like another interesting trading system, but this would be considered like a CRT candle, like a really big, thick candle that's like one directional that is going towards a target, right? And then when you get these types of candles, oftentimes when you sort of sweep the bottom of that candle and the target it was going for, right? Because of the one directional nature of price, you tend to get like rapid moves back in the other direction, right? It's just basic range dynamics. You go to the range high, you fail to close above the range high, you go back to the mid range, and then oftentimes price will go back out of equilibrium to the downside of the range and see if it can find something there, and then back inside the range and so forth until you get a breakout, right? But for our purposes, like we're not even looking for a breakout. Like we just have to sort of think about this candle range here as like just one candle. Just the whole curve trade is just it's one candle. And if you just think about it as one candle and like you believe that I'm correct and that we've basically sweep bullish yearly close, sweep that bullish yearly close, and obviously we're down this year, but like I tend to believe this is just sort of going to be like kind of like a fake out, and ultimately this year resolves up. And at some point, with this kind of pro-regulatory environment, we've got catalysts like that are going to allow people to build new stuff on chain. There's 100% going to be an ETF for this, and there I think is going to be an institutional wave of like demand for like DeFi ETFs, because these are going to be some of the most premium protocols in crypto that actually generate cash flows in a way that is like obvious for these people to model, like in the same way that they model stocks, right? So I think all of this is like heading, our way down the path somewhere, right? But if we kind of zoom back in now, to like the monthly, you can kind of just see the general risk reward that you're looking at here, because from here to new lows, yeah, okay, you're losing 60%. And while that's not great, I mean, in altcoin land, that's
sort of par for the course.
That would be a good bear market, right? If you, I only lost 60, right? That'd be
outperform.
Yeah. But on the upside here, I mean, this is like 600%.
Just to the mid-range.
Just to the mid-range. So I'm seeing like a very kind of like multi-year, chain link-esque almost. Like, I mean, we've been at this level since 2020, right? And if you want to even just cut out the bull run, like we've still been going sideways for 1,000 days at basically the same level. Like we're putting in like an enormous accumulation base, and the odds that this thing just breaks down and dies at this point, like during like maybe the most opportune time in history, it doesn't make a lot to me.
Well, I'd like to see, I mean, there's a couple of things that I want to think about with this, because I like where your head's at with it. Like one is I'd like to see this in like a market cap chart instead of price, because like price could be going down and market cap could be going higher throughout.
I mean, that's a good point, because the curve market cap chart is a little bit different because of the inflation dynamics, right? And I think from like a from like a TA perspective on the market cap chart, right? It's pretty clean. You kind of have like a zone here. We bust out of the zone. We're retracing back to the mid range of the zone. Like this is like a good place to be buying if you're bullish. I mean, again, like look what you have. You have like a multi-year sideways. Like this is all just a range, right? This is all just a big accumulation range here. And then we have a huge mega impulsive move after the election. We come back into the range. But this is the point in time where you load up the bags. You don't necessarily want to chase this massive pump. But now you've also probably put in like this is probably a nice little fib area as well if I fib this out. Where's my...
Are we in the golden pocket?
We are in the golden pocket. There's the golden pocket right here for those of you who can't see very easily. There's your golden pocket.
Lovely.
I'll put that in a different color there. So yeah, this is prime time long-term accumulation. I think like as long as you can eat these like downswings, which for people in crypto is honestly nothing. It's just, especially if you're buying spot and chilling, right? I'm not saying to go leverage long this thing, because how leverage long can you be if you just want to hold this for like multiple years and a 50% drawdown is in the cards, like
right,
easily. Not a smart play. But I think most of the people who listen to this pod, they're probably longer term minded. They're probably more investors than traders. And they probably like want to believe in something in crypto, and that everything isn't just some failed, shattered dream like Ethereum or something like that.
Or just like a meme coin casino. I think we've long, like on Alfalfa even years ago, we've like long held this belief that stable coins are sort of like crypto's like best use case. And if stable coins are sort of on the horizon, and like stablecoin payments for real world things actually comes to pass, which I think Coinbase is like really pushing towards, that has to be a fundamental demand driver for something like Curve, right?
Yeah, look, don't get me wrong. I still think there are a lot of risks in the market, right? Like, some like BlackRock type institution comes in, then they decide that they're going to build something else and run all the volume through that. There is still this kind of persistent question of like how much of all this future system like actually runs on like truly decentralized rails versus like we build some like permission rails and instead.
Totally.
There's a lot of risk there, no doubt. But like there has to be risk if your baseline return is like 600%. Like there's no 600% return in the market that like doesn't have risk attached to it, right? And keep in mind too, like 600% that's like my first target. That's like target one. That's just your mid range.
Yeah.
I think if you dare to dream like the other side of the range, now you're at 1200%. And if you dare to dream, dare I say, a range breakout,
sky's the limit. There is no limit.
Sky's the limit. We may have to start dreaming about these like 50x's again. Like maybe they're still possible. Maybe there are future 50x's sitting right in front of us for right now in these like protocols that we've known are good for like a long time, but we've just been so conditioned to just watch them slowly go to zero or do nothing while like trash pump that like our brains like can't conceive of the fact that things could be different in the future. And we just assume that the future is going to look like the present. And then you and I both know that, especially in markets, that is very frequently, dare I say, more often than not the case.
Let me follow up with another question. Is Curve mostly tied to the Ethereum ecosystem?
Yeah.
Yeah. So
yeah,
that's another risk. It's like, it's not only just BlackRock taking it, but it just could be like another chain having the most stablecoin usage. I
mean, although I'm kind of blah on Ethereum right now still from like a price perspective, although I do want to tell the listeners, like I think I've lightened up on I think the $400 stance is less probable now.
That's good to hear.
I gave a nice little bull case post in the Magic Lines this morning for the downtrodden ETH holders. Still not sure I want to hold ETH because like even if I think it's going to go up, the question is always more than other stuff that's less risky, and that is a question I haven't asked yet. But what I wanted to say is that like although I'm sort of bearish on Ethereum price, I'm not really bearish on Ethereum activity. And activity as measured across like the entire Ethereum ecosystem, like has really just been like mostly up only, like as far as I've seen for the past few years, right? Like Ethereum just made these design choices that cause the token value accrual to just get like annihilated.
Yeah.
Right. Like they basically like enabled an environment where these layer twos could just get this tremendous benefit of Ethereum security and basically like capture all of the value and give like nothing back to mainnet. But I do wonder if we've kind of hit like peak just Ethereum failure. I would still like to see some like complete capitulation in Ethereum leadership and everything. It feels like a little bit like 20K Bitcoin and like, oh, that was the bottom. But then there's that last capitulate, FTX happens and you go like 13K or whatever. And then it's like, oh, okay, that was the bottom. So maybe we still need one of those. But like, regardless, like, I don't know how much this affects Curve. And I would lean towards the future anyway. Like, it would already be my base assumption that these protocols, like these application layer protocols that like have the most direct interaction with the user and that generate like actual tangible fees, right? Those I would assume as like my default are going to be the things that capture value in the future. I still think it's a very interesting question of like whether L1s are worth anything in the future. Like I think that's a pretty nebulous assumption at this point. Like people just buy L1 tokens. Yeah, the fat protocol thesis versus the fat app thesis. I don't think we have an answer to that.
Time will tell.
Like the best thing you could say is that there's like some sort of like commodity type demand for ETH, the token, but like I don't know. Like there's ETH is kind of like fucked because like they're trying to basically, you know how when you have these entities or institutions or companies in the real world, I think this is like an old biology idea, right? Like you can kind of compete on two things. You can compete on product or you can compete on distribution. And when institutions or companies like they fail to be able to compete on a product level, they then try to basically control distribution, right? And the obvious example of this that was probably very salient for people is like mainstream media. Like mainstream media, the product went to hell, could no longer compete on a product-based level. What do these institutions do? They try to like suppress or shut down all the alternatives, right? And I think you've seen a similar analog happening in Ethereum where you've basically had like a kind of like a broken incentive system. I think like the incentives just didn't quite make sense. And then rather than change the product in a particular way so that like the economic incentives like become better aligned, you saw people going to this, like you ever hear people talk about like Ethereum alignment? So it's a big alignment, right? It just became about this like nebulous kind of like, how aligned are you with like Ethereum culture, man? And it was, it's the huge fear for Ethereum people that we've enabled all these like updates. And now basically you can run like, you could be Coinbase, you can run like the base L2 and like you can just use USDC for all of your gas, right? And you completely obliterate the need to even have Ethereum in your wallet. And now you have this asset that not only is not getting fees, but it doesn't have a monetary premium either because like people aren't holding it for these. They're just like, well, I'll just hold dollars, right? And that's like the complete destruction of everything.
Yeah.
Right. So your options are one, like redesign the functions, the core mechanisms of the system so that, things happen in a way that are economically aligned and you get the results that you want in the end, or you take this like cultural angle, like social shaming basically. And excuse me, I have to sneeze.
Bless you.
Oh,
there's another one coming, I'm guessing.
Oh man, hopefully they fix that in post. They always come in threes for me, so stand by. But yeah, this kind of like cultural, moral grandstand. It's very interesting to me to just see the parallels between like Ethereum and kind of like the modern left, or like I not to get like overly political, but it's been my observation that the Democratic Party, right, is just a bunch of fucking losers right now. Like they've just been rejected. Just everything about the party has been like rejected. Like they're just in shambles, tail between the legs. And I think a lot of the things that this, the American like left has tried to kind of push out in the culture, like again, like this idea of like social stigma and like controlling speech and distribution, like that's like a thing that was like rejected, right? People rejected that, and then they went to this sort of like testosterone addled, like right wing, like lift weights, and kind of like just other side of the coin. And like Ethereum has always seemed to be like over the past couple of years to be this kind of like low T, like we're dancing around in unicorn pants, and it's just like it's like a high T world now. And then you had like Solana basically come in and just be like, fuck decentralization. We're just going to build things and who cares? Just be chads. And,
So how does Curve fit in with that within this framework? It's like, it's just good enough as a standalone app that you can ignore the sort of like the ethos of Ethereum, the chain.
Yeah. I mean, like for one, like I don't associate any politicalness with Curve, which is good. Like I don't think blockchains should be political. Right. So that's great. But like the mechanism for like value accrual is just much clearer, right? Like if I were to have you like write a thesis on like why Ethereum will be worth X dollars per token in 2040, it's like, good luck. You're kind of like inventing models to justify like a fantasy price that you have. It's like a lot of these models have just been like, I know this has to go there because this asset is awesome. So now let me sort of like backwards rationalize like all these like ways where, number will go to this thing. Whereas with something like Curve, like you can probably model it in like an economic fashion. You could probably say like, what do stablecoin volumes look like here, and then what all the mechanics of the token look like, the demand, to in Curve, I think it's similar to what ETH wanted to do in that it has like this, like, there's like a commodity demand. Like you need the token to perform utility functions on the network, i.e. direct liquidity to your pool, right?
But only for this instantiation of stablecoin trading, right? Because like you mentioned, someone else could start their own liquidity pool for stablecoins, and they could pay you back in dollars now that it might be legalized, and that would just be a lot easier than having like this crazy token mechanism that you got to wrap your head around.
No, that doesn't matter though. Like if fees, like the fees in Curve pool, like they are dollars. They're stablecoin pools, right? So when you do like a X amount like trade, like if you trade like $1 million at like 1 BIP or whatever it is, you generate
the
like
protocol
1,000.
gets those fees, but then they pay out the users in Curve. I guess that's the part where I'm thinking
it doesn't. I don't think they do pay I think you get like inflationary rewards in the form of Curve, but I think the fees are paid in the same way that fees are paid in most LPs, which is you get like a share of the two tokens, whatever being swapped. Right. And in this instance, stablecoin to stablecoin, like you're just getting dollars. But even if that weren't the case, like it wouldn't matter. It wouldn't really matter, right? There's like a tangible utility being performed by the protocol. There's a demand for that utility. There's like sort of like a market rate to facilitate that transaction, and then that transaction accrues to the protocol and the token holders, right? And something like Curve, like you could be like, okay, well maybe these guys are going to make their own thing, but like network effects, I think, are very, 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 very real in this, right? Like if you want to swap like a couple $1 million of stable coins, like you need like deep liquidity. You need really deep liquidity, and you don't necessarily want to just go through some other random upstart protocol. And then Curve's been around for so long; it's got like all this Lindy. So I think the barrier to entry to displace it is quite high.
Yeah. I wasn't picturing like just like some startup beating Curve. I was picturing, like you mentioned, Citadel or BlackRock comes in and is like, "Oh, we're going to actually play in this game now." And like the way that I picture crypto, sort of forward looking, is that you kind of get away from being on chain or feeling like you're on chain. You do it from your phone, like in your Coinbase app or something. And it's like they could use pools outside of Curve or something.
Yeah. But like, again, like BlackRock can't come in and start a pool that like mirrors Curve, because like one of two things is going to happen, right? Like either they, for some reason, are like, oh, we're going to go full decentralized, but for some reason build our own thing when there's already a full decentralized thing. And then they have to attract liquidity. Or you go like, well, we don't need the liquidity because we'll just process the transaction ourselves on some private network. But then it's like not really crypto. And then like there's still going to be all this demand for decentralized rails, and it's not going to displace that. So
yeah, there'll be some demand for decentralized rails.
I think like an enormous amount. Like we see that like in play today, and I think that continues. You know, it's obviously hard to know exactly how the future is gonna turn out, but I feel pretty good about it. I'm
still I mean, I like this trade regardless, but I'm just kind of like just thinking through in real time here. But like the way that I'm thinking about it is that I like that crypto provides a competitive alternative to traditional finance and centralization and stuff, and I think it plays an important role. I don't think it like wins. I don't think it like gets all the money. I think people are okay using centralized stuff for the most part.
Yeah, I mean, I could quarrel with this a little bit, but like I feel like we're gonna go on like another 30-minute tangent if I do.
yeah. This could be like an after hours pod talk.
I know. We'll have to put a pin in that, but interesting discussion for sure. Let's close up with like a little mini educational segment. We went a little long in the tooth here, so I'm not gonna do too much, but I want to build on a kind of deeper lesson I gave in the Discord last week, where I talked about the importance of time in trading. Like I think when you come into trading, and I still think the vast majority of people who are in trading and consider themselves to be professional traders, like they mostly almost entirely think about price. And it makes sense, right? You're like, oh, I want to buy at a price. I don't get paid for holding the asset. I get paid for the asset going above what I bought it for and then selling it, right? This whole idea of like, when do I buy, like as anything that's detached from price doesn't enter most people's minds, right? Like when you trade, like, do you think about time when you trade?
Always. That's why I trade options. There's always a time element.
Good. But time and options is different.
So I don't know what you mean by time. Do you mean by like time spent in the markets, like reps? What do you mean by time?
I mean like when you buy, when you sell.
Like time within a 24-hour period on the daily clock.
But that's the magical thing about trading is that time transcends it transcends the day, week, month. Like, yes, it's very true that like time as it centers around like the 24-hour clock, a work week, right, is very important. And I always like start off with that when I introduce people to the concept of time, because that's the thing that you can kind of grok the most easily because it just mirrors your day. Yes, I wake up, things happen in the morning, then, I go to bed, the market opens today, the market closes at this time, the market opens again tomorrow, right? That kind of stuff makes sense. Where people start losing it is when they start thinking about like the concept of time on like 15-minute candle cycles or something like that. And then you're like, whoa. What the heck is going on here?
Yeah, you've lost me now.
Have you ever heard about the concept of kill zones? It's like kind of like a popular ICT concept.
No, this is new for me.
Okay. Kill zones are one of those things that like I ignored when I got into trading because it didn't make sense to me. The idea that like I should care about time didn't make sense to me. I would log in, I would see some guy on Twitter who was like an ICT guy talking about like the Asia kill zone. I'd be like, what the hell is this shit? Like, or I'd see somebody talk about like, oh my God, the monthly close is this level and now this stuff is going to happen. And I was just like, the fuck cares? Like what this random candle happened to close at this one point in time. Why does that matter at all? Right. So I ignored all this stuff for a long time. And, since spending a lot of time doing this, this is probably my 5th year of just doing this like nonstop.
A lot of reps,
just like thousands and thousands of hours of chart time, right? Thinking time, testing time, all of it. Like I'm very obsessed with this stuff. And I've come to the realization that maybe not that time is more important than price, but I think time is like just as important as price. In that, like, I think that if you are able to get your higher level bias of where price is going to go, and you can nail down the timing of when you want to get in and why that time matters, your entry almost becomes like, I don't want to say irrelevant, but its importance is just is greatly diminished.
So does what you're saying apply to longer term time horizons? Like when we opened with the Bitcoin chart, and you pointed out that like low 70K level is like a buy zone. Can you incorporate time into that kind of framework, or are you talking more short term stuff?
It's everything, right? And the reason why it's everything comes all the way back to candlesticks, right? And for people who don't understand candlesticks, right? Candlesticks are visual representations of time-based ranges. So this is a weekly candlestick, right? So on a candlestick, you have the color, which denotes like an up close or down close candle. So in my colorblind case, the white candle, is this white?
Yeah, that's white.
The white candle is bullish. The blue candle is bearish, right? So you can kind of visually immediately see price go up, price go down, right? So every candlestick has a few components. It has the color, it has the opening price, which is the bottom of the bullish candle or the top of the bearish candle. It has the closing price, which is the opposite, the top of the bullish candle, the bottom of the bearish candle. And it has your high and your low. And from one candle, like you can get a lot of information about what is happening with price. Like every candle has an open, a high, a low, and a close. Open, high, low, close, right? And most every candle does not just open and go straight up or go open and go straight down. Most every candle you look at is going to have an opening price. You're going to observe price going below the opening price when bullish, and then closing back above the opening price, ultimately, normally below the high. Virtually every single candle does this. Open, high, low, close. Mm-hmm. And when you hear people who are these sort of like ICT traders, they talk about this concept of like accumulation, manipulation, expansion, right? Every candle effectively has its own little consolidation, manipulation, expansion, right? Like this is kind of how price moves. It ranges, it tests the boundaries of the ranges, often fails to close outside a particular range, and then at some point expands, breaks out of the range, right? And it does this because price is always trying to sort of, find fair value, right? And as fair value, as market participants like are in agreement about fair value, price consolidates. And when like a disagreement starts to come up, you see price expand, right? And then it's going to expand towards whatever the market consensus of fair value is. And this is how price moves, right? So when we talk about time-based trading, right? In a perfect world, if you were to get long this candle, right? What would you do? You would wait until price goes down here, and then you would be, I'm going to long at the bottom and go up, and easy. It's so easy. How does that? Why can't I do that every time? Well, you can, right? But the critical thing about like time-based ranges, any sort of time-based cycle, is that, again, you usually have these like periods. You have a period of accumulation, you have a period of manipulation, you have a period of expansion, right? And as a trader, you want to be trading the period of expansion most of the time. Like most people are trend-based traders that are trying to catch these like large moves as price sort of like displaces from wherever equilibrium is, right? So the beginning of every candle is typically a bad time to trade. Why is it typically a bad time to trade, Eric?
Because you haven't identified what these like points are on the candle yet.
Yeah, I mean it's close. Like before price wants to go somewhere, before price can go somewhere, typically there has to be like a period of consolidation, some sort of period of accumulation, usually like the cohort of players that is going to move the market up or down has to get some sort of position, right? So in the opening phases of any candle, like you're typically in like the consolidation phase, the accumulation phase. There is a less likelihood that you're going to get into something right at the open and it's going to go somewhere, right? The other side of this coin is that at the very end of a candle, it's also kind of a bad time to trade because you're about to roll into a new candle. And then price is going to want to have a tendency to do its open, high, low, close thing again, right? Like, sure, price is going up, but the new candle starts and now maybe price manipulates against your position and you go into drawdown before like continuing, right? But everything in the world could be thought of in terms of one candle. Like this is a weekly candle, but if I show you a daily candle, it's the same thing, right? And the daily candle, I think, is like the easiest way to sort of grok this because you can think of like, oh, daily candle, let's think about like the New York stock market, right? And this is where we start getting into this idea of kill zones, right? Kill zones are periods of like extreme volatility, maximum liquidity in the market where price has like the highest percentage chance of making like a very rapid move. So if you're day trading, you want to be trading in those windows because you're going to spend the least amount of time watching the market chop and do nothing and have the maximum like chance that when you get in a trade, the market is going to move in your direction.
So kill zone is a opportunity for you to be trading in. I thought, just based on the context, I thought kill zone means like you don't trade there. It's the opposite.
No, you do trade there.
Okay.
Only like I have a rule that I sometimes don't follow because I'm not disciplined sometimes. But the rule is to never trade outside of a kill zone. So when you talk about like a daily candle, right? Your kill zones, you get like a New York session, and like typically you have two New York sessions because you got New York morning and you got New York afternoon. And I'm sure that you know that like the maximum volatility tends to be around the open,
yeah,
and around the close.
Yeah.
Right.
I do most of my trading right at the open.
Yes. And I do most of my trading right around the New York open.
Yeah.
Because like, although you have a daily candle, right? Like your session itself is a candle, right? Because think about like a day. You have like a New York AM session. You have a New York PM session. You have an Asia session. You have a London session. So in effect, you have these like four separate candles, if you will, ranges within your daily range. So you can kind of break that daily movement into these little mini ranges that have their own unique opens, highs, lows, and closes, right? So if you're bullish coming into the New York session, right? And you're a day trader who follows like some of these principles that I like follow, you don't sit at your desk, have the 9:30 market open and just market buy and think candle goes straight up, because that's not what happens. Even when you're bullish, typically the session opens, the candle opens, price moves away from where it ultimately wants to go. It becomes cheap on a relative basis to where it's about to expand to. Participants who view it as cheap are accumulating down there. And then price goes back in the opposite direction. The candle opens here, it makes a low here, it expands to the upside, and then people sell, distribute at the top, and then you close here a little bit lower, and you're trying to take that move for a ride. So although you don't buy the exact opening, you might buy like for in New York, for example, I think the best time to trade is the 10 a.m. to 11 a.m. candle.
Yeah, 30 minutes after the open.
Yeah, because you have this open, right? You have 30 minutes for price to kind of like do its thing, to run old highs, run old lows, consolidation. You see structure form, right? And then at 10 a.m., you get like a new 1 hour candle to form. I think it's also the start of a 4 hour candle as well. I think in stocks, like the 4 hour candles are 6 a.m. and 10 a.m., right? So you have this candle forming that is, again, its own little time-based range. So you're aligning like the 1 hour candle, the 4 hour candle, the opening volatility of the stock market, the beginning of the New York AM session. You're aligning all of these things so that when you get into a trade, you're positioning yourself at exactly the right time for volatility to actually do its thing and push price in your direction.
So, man, you're giving me a lot to think about. Like, so in a few days, we're going to have this big confluence of all these new candles, right? There's going to be a new weekly, a new monthly, a new quarterly, in addition to like new hourlies and stuff.
Yeah. And we can expand this concept to like a weekly candle, right? On a weekly candle, the beginning of your week is Monday. Monday's usually a bad day to trade. Why is Monday a bad day to trade? It's the start of the weekly candle, i.e. the candle is just opened. There's typically a period of consolidation, right? There is typically like buyers, sellers accumulating their respective positions. It tends to be choppy. It's not the thing that you want to trade, right? You want to trade later in the week. Like the best time to trade is in the middle of your time cycle, because at the beginning of the time cycle, there's choppy conditions because people are accumulating. At the end of the time cycle, distribution has happened and a new cycle is about to start over, at which point you go back into distribution. So a lot of trading can be like isolated into finding these little sweet spots of whatever time range you're putting yourself in when you're trading, whether you're trading a daily candle or an hourly candle or a weekly candle, and thinking more about when I'm going to enter in addition to what price I want to enter at. And the same thing is true of a monthly candle. First week of the month tends to be a little choppier, but like week 2, week 3 of a monthly candle, that's like really your sweet spot, for the movement. Much in the same way that like Wednesday, Thursday tends to be, or Tuesday, like, because in your standard kind of like week, and it doesn't always happen this way, but like the kind of framework is like you accumulate on Monday, consolidation. Tuesday, you have like maybe a fake out move outside of that range. And if that's when you get it, then that's the best time to position, right? Like if you can kind of like see the fake out position as it's about to go the other way, that's what you want.
So, but like, let me ask you this: like when you're trading, are you kind of like imagining what the candle is looking like as it's forming? Like,
yes.
Okay.
Yes. And when I day trade, I actually use like an indicator that puts like a giant candle here on the right side. So I might be trading on the 1 minute chart. And then on the right side, I have like the 1 hour candle. And I'm watching that candle form in real time. And it allows you to sort of be on the lower time frame watching things while keeping sight of the big picture. Because the big picture is really what matters. Your lower time frame is just sort of like for your execution, and it's easy to get lost there. But like a lot of trading is just like looking at the big candles, waiting for a new big candle to form, to start, and then go like, okay, based on the last big candle that happened, what is this candle likely to do? Right? Like if we get let's go back to Bitcoin, right? Let's just pull up the Bitcoin chart. Let's pull up the weekly Bitcoin chart and just kind of assess where we're at. Like this was last week's candle, right? Look at the context here. You sweep a monthly level, close back inside, bullish. This candle forms, you're expecting price to go to the high of the previous week. That's very basic. This week forms, right? The new candle starts, you're expecting price to go here, right? And overall, you can see you're expecting price to go upwards still, like probably to the high of this candle. Right? So when you start your new weekly candle, you have all this in mind and you're keeping, this prior week candle as your framework and thinking about where this candle opened, right? So there's your weekly open right there. So what I shared in the Discord is that I am this week, like I'm bullish. I want to be long, right? I did take like a little day trade scalp today, which I won't get into because it'll be confusing. But like I'm expecting price to go to the yearly open, which is like, probably like somewhere above this target, right? And I know this week opened here. And I know that the typical way a candle forms is the candle opens. There's some sort of usually sideways formation of a Monday range, right?
And then it has like a wick on the bottom.
So I'm like, if this candle plays out as I think it will, you probably get a move below the weekly open into some sort of demand that it wants to tap into. And, that could be an order block. It could be like a fair value gap. It could be some sort of draw on price in that, you've, with the way this price is, right? There were buyers here. The buying pressure was strong enough such that it closes outside the range. You're presuming that there are still orders left behind in here somewhere because we closed outside the range. And you think that when price goes back here, those orders are going to have the juice to put it higher, right? So your candle forms, it's Monday. We're not doing anything because it's Monday, but today it's Tuesday. But like, is it amazing to position today for like a long on the week? Not really, because we're still chilling above the open. Like, where is my discount? I'm waiting for the discount. The setup now is pretty good, I think. And it wouldn't surprise me if like Thursday is when we have data. I don't think there's any economic data tomorrow, but like this is one of the things I do when I look at the calendar for the week, which is so important. Like you can actually look at when the red folder news is. If there's no red folder news Tuesday and there's red folder news Wednesday, then I'm already anticipating that the move will initiate on Wednesday because that's going to be the thing that juices the volatility into the market, right? And if there's like nothing until Thursday, like I might anticipate chop until Thursday and I might be mentally preparing for Thursday to come. But when Thursday comes this week and we have the red folder news, if I get like a nasty pullback into here or something, in my mind, I'm thinking, okay, it's buy time because like I'm thinking of this as a weekly candle. I'm thinking that like I already went through the beginning part of the candle where we accumulate. We've now manipulated below the opening price, right? And that means that like when I'm getting into this trade, like if this is the weekly candle, let's say the weekly candle ends up like this.
Right, you're buying in the wick.
I want to buy in the wick. That's kind of like the idea. Where is the wick? So price goes here. I buy in the wick and the price ultimately goes up here and you ride this whole thing up. This is sort of like the mental model. You're thinking about the candle. If you're bullish, you're trying to buy in the wick and you're trying to think about that point where the wick is going to go to. You're trying to observe some sort of change back in the other direction position. And then you're trying to ride the candle expansion up. But it's all about thinking about like the opening of the candle, the consolidation period, the manipulation period, if you will, the move in the opposite direction to which the candle actually ends up going. And then again, the close, the sort of target of the candle and then the retracement of the candle. And then we do it all again in the next candle.
I never think about this kind of thing, but I think I'm going to. And I'm guessing my presumption is that it takes a lot of reps to be able to like see this stuff with any type of clarity.
I could give you like a 12-hour lecture.
Yeah.
We're only scratching the surface.
But I'm excited. I think this is really cool. And it's just like a new approach that I'm really excited about.
Yeah. And like, we're going to do this. We're about to, like we talked about the Bitcoin quarterly candle. Next quarter starts in 7 days. So on a quarterly basis, you might get like a choppy few weeks at the beginning, right? Because that's going to be the beginning of that quarter. That's the tricky thing about trading is that like everything is fractal. Stuff exists on the lower time frame. It's the same on the higher time frame. And then figuring out how to interact all these pieces together is kind of like the hard part because these things all exist within the context of the time frame above them and the time frame above them. And at some point you have to like isolate out a bunch of the noise and be like, this is my framework. This is the time frame I'm working within. I've aligned everything and I'm just going to go from this part of the candle to this part of the candle. And that's my trade.
It's really cool, man. Thank you for sharing that.
You're so welcome. And the purpose of this, like if you listen to this and you're like, I have no idea what this guy was talking about. I don't understand it. So that's fine. I mostly want to just like plant seeds in people's brains, open up an idea to you that maybe you can go explore more, investigate on your own. Because I know for me, like I said, it was like a major aha moment, eye opener when I finally got this stuff. And I was like, I wish somebody did tell me, I just didn't listen because I never had like a mentor or anybody I trusted. I was just like learning from anons on the internet. And like, for all I knew, they were just, had no idea how to trade. Right. But if you have faith in me and you view me as like a digital mentor, then yes, take what I'm saying seriously here. This is like a real thing. It's definitely worth investigating. And if you like actually like unlock this, you like 5x your ability like that. It'll complete game changer.
It's awesome because it's so like simple in its presentation. I think it's like one of those things that people will grasp because everything is candles and you can just kind of imagine it as it's forming.
Yes. Everything is a candle. Everything is
Everything
a candle.
in life.
Everything is a candle. Everything is a candle. Everything you look at on your chart, every time frame, it can all be broken down into a candle. With
I got a baby due in like 72 hours. Is that a candle?
Your baby's life is, it's a candle. Your
it's a candle.
we could plot your mood as a dad across time as a candle. You're going to have the opening price, which is the baby birth. And then there's probably going to be a wick, like a really bad wick. But then years later, when the candle closes, you're going to be a nice expansion candle. Maybe you retrace a little bit, but it's a good move, right?
I don't know if this is brilliant or this is deranged.
I don't know
everything
either.
is a candle.
Maybe a sign that this episode has gone a little too far, a little too long. Anyway, let's just make an executive decision to call it there. God bless you if you guys made it through this whole episode. This is like one of the old episodes where we used to just ramble off for.
This was awesome, dude. Thank you for that instruction at the end. That was so cool.
Yeah, no problem. Hope you guys enjoyed the episode. If you did, again, give it a like, subscribe to us, helps us out. We're out here putting this out, trying to make you guys richer and more informed and more entertained.
It's all candle, baby.
I hope. Quick reminders. We got the Discord, alfalfapod.com. We've got the Magic Lines trading video newsletter, education, all wrapped in magiclines.xyz/IL. Check it out. Do the trial, see if it's for you. Hope you like it. Hope you enjoyed this. We'll see you guys next week. Thank you for joining.
All right, later.